Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, what's coming up on the show today?
Jim, we're going to take a look at how the resource juniors have done so far this year compared to the prior year and what we might hope to expect for the rest of the year.
How do the resource juniors look at midsummer?
The resource juniors this year have had a much better year as far as the TSX Venture listing traded value is concerned compared to last year for the same period. But it still has not caught up to the levels that we witnessed during that mid-2020 to mid-2020, 2022 period, despite gold holding steady in the $3,200 to $3,400 range. Now, the market capitalization of the 1,092 TSXV resource listings that I track, it's about $59 billion. And of that, 35% or about $21 billion is attributable to 91 stocks trading above $1. The remaining $38 billion is spread among 92% of the listings. About 1,000 juniors share that market cap. The percentage of TSX and TSX Venture resource listings trading below 10 cents, it continues to decline, and it stood at 40.5% at the end of July. But what bothers me is that the decrease is at a much slower pace than the bear reversals we saw in 2009, 2016, and 2020. Although I believe we are in the beginning of a resource junior bull market, this is the slowest emergence that I have ever seen since I started tracking this data in 2000. Now, in terms of financial health, it remains poor. 45% of TSX Venture listings, and the number was 1,092, have negative working capital totaling $2.7 billion. And that's never going to be paid back in cash. It'll probably all just be converted into paper. And $883 million of that is owed by juniors trading below 10 cents. So for those of you who like to bottom fish below 10 cents, make sure you check the financials. Now, a total of $3.5 billion sits in treasuries that have positive working capital as of the last reporting period, and there are 443 juniors, or 41% of the total, which have more than $500,000 working capital. And that is the group that investors who are interested in the resource junior sector should be looking at. Now, what can we expect for August and the rest of the year? We are in uncharted waters as far as post-World War II history is concerned, thanks to the radical changes Trump is imposing on the world order that the United States has cultivated in the past 80 years. Gold is at an all-time high in real terms, but that is not igniting the resource juniors. And even the gold producers are still trying to catch up to gold's gains. Now, today we got the U.S. employment situation numbers, and what was shocking about them was that the figures for May and June, which were previously strong, have been sharply revised downward, and July came in weak at only 73,000 jobs. This is not good news. I have been expecting consequences from the import tariffs and the immigrant deportation policies, but I wasn't quite expecting them to kick in already. So this is a bad sign that during the past 3 months, it's already kicking in, and the worst is about to begin as all these high tariffs formally begin on August 1st. Now, the weird thing is there's this blind faith in AI and crypto as going to save the day. And I do not share that optimism at all, because I see Bitcoin as a Ponzi scheme that could evaporate overnight. And I also see AI destroying more jobs than it creates. And this is the strange shift that we've seen, where Wall Street during the first half of this year was wringing its hands about the Liberation Day policies and how the United States was upsetting basic economic principles. But now they are all busy coming up with fantasies about why the future is going to be extremely rosy. Now, what's going to happen to the juniors going forward? Well, I like the strength that we saw in the first half of this year. I like the level of the gold price. I'm not very happy about the price of most of the metals, which are hovering at a sort of level indicating maybe the global economy is going to go on a downturn, which is what one might expect. And what is really unclear to me is what Trump's determination to destroy Canada as an independent, neutral nation will do for the appetite of Canadian investors for their Canadian-listed resource juniors. That, to me, is a big concern going forward.
How did the favorites collection finish?
Yeah, that's
July?
Right. Yeah. Good catch.
How did the favorites collection finish July?
Last week, I did an hour-long Kaiser Watch episode, which was really a walk through the 25 companies that are in my favorites collection. The written version with graphics has been published on Substack in 3 parts. The first dealing with the gold and silver favorites, the second with the base metal favorites, and the third with all the other metals. This was published on a free basis to give everybody a baseline snapshot of what each favorite is about. Now, these audio Kaiser Watch episodes, they will tend to be unrestricted to the public. Company-specific comments will be published without audio, and that's what we'll see a lot more going forward in the next couple of months. Now, the important thing that I did with this 3-part series is that I developed outcome targets for each one of the companies, and I generated the graphics that are based on my rational speculation model, which presents both the fair speculative value channel for that outcome at the different stages of the project, as well as the S-curve channel, also known as the Lassonde curve, which can break out, especially during the discovery delineation stage when the sky is potentially the limit about how big and wonderful a new discovery can become, and also descending below the fair value channel when you enter the feasibility demonstration stages where the investors begin to worry, well, how much is it going to cost and how long will it take to get this project to a permitted production decision? Now, historically, resource junior audiences have looked at the sector from a qualitative perspective and only in a quantitative manner in terms of momentum. Today, the competition comes from cryptocurrency, where there is nothing to know about the fundamentals of these trading vehicles. All you need to believe is that trend is your friend and that there is an abundance of greater fools than yourself. As the boomer generation retires and becomes lazy, it's joining the younger generation such as Gen Z and millennials in embracing the same sort of gambling instruments. And this is a really big problem for the junior resource sector, which is suffering from a catastrophic collapse of eyeballs. With gold at $3,200 in a relatively muted inflation environment, a new high in terms of real prices, there should be a lot more eyeballs on this sector than there is. And to deal with this absence of eyeballs or this failure of eyeballs to be attracted to resource juniors, I've developed this rational speculation model as a tool to apply quantitative thinking to a sector which has no intrinsic value, just the potential to create intrinsic value in the form of a future mine that supplies the physical world. Now, the resource junior sector is difficult in its own right, and by that I'm not referring to the fact that it is often polluted by shysters trying to concentrate the wealth of the many into the pockets of the few. Finding an ore body is difficult with very low success odds. It involves a series of fundamental events called exploration results, whose meaning is not always easy to interpret. Now, in the past, the basic approach was to buy low when the stock was quiet and sell high when it becomes noisy as results get promoted. Exploration programs used to have what I call an anticipation cycle, and that the uptrend of this anticipation cycle would attract the momentum traders to whom those who bet on an early fundamental, on a fundamental outcome could sell at least some of the stock and recycle it for the next play that comes along that's still in the quiet period. But since this Resource Junior bear market began in 2012, these anticipation cycles have become very rare. This means that Resource Juniors only attract new buying in any sort of volume when there is a results-based news event that is positive. But during the same period, we've seen the rise of algo trading and the elimination of the uptick short selling rules. And this has turned the Canadian financial sector into a giant vampire squid which snuffs out these rallies. And it's easy for them to do because they know that the next news event is going to possibly be months down the road, maybe even longer if there are permitting or seasonal constraints that affect the project. So good news, retail buying comes in, the algo traders sell into it, lean into the bid, crush it, and you do not get these sort of sustained uptrends that allow incremental value to be, higher value to be created for these resource streams on the basis of results that are supporting or even growing what the target outcome is. Now, there's also this problem where when the former Prime Minister Justin Trudeau signed Canada up to UNDRIP, he basically elevated 3% of Canada's population into a DNA-based aristocracy, which now asserts dominion and final say over the resource development future of the second largest country of the world. And I don't quite get this. There's no way that the descendants of the people who crossed the Ice Age land bridge 12,000 years ago and within 2,000 years had slaughtered North America's megafauna into extinction should have this special status that relegates all other Canadians to second-class status. And the new Prime Minister, Mark Carney, he needs to simply rip up UNDRIP and stop this collaboration between First Nations and Trump to destroy Canada as a neutral nation with a substantial resource wealth left to be discovered and developed. The cultural traditions of First Nations should be encouraged to flourish, but not as a priesthood that lords it over everybody else. Now, there isn't anything I can do about Canada's policies which allow First Nations to stifle exploration in Canada, but what I can do is provide a framework to educate audiences about how to think quantitatively and qualitatively about Resource Junior stories. And this 3-part series that I just did was designed to set the stage to help people see what the size of the prize potentially is, what it takes to confirm delivery of it, and to, when they get tired of the momentum story, when they discover that the trend is no longer their friend and that the stadium has been emptied of greater fools, they come back to a form of gambling which is extended over time. It's fundamental outcome gambling. You can quantify it. You can't quantify what the future price of Bitcoin is supposed to be, but you can what the future value of a deposit in the ground that is turned into a mine can be. So the Resource Junior sector needs these sticky audiences, people who get their head around the story, who follow what the company is doing to try and prove that this is there, and to learn, okay, what does all this jargon about geology mean? It becomes a form of entertainment that accompanies the goal of making money, and because the money is going into the ground to produce physical new wealth that helps the world, it isn't just this game of transferring wealth from one party to another, which is all that the whole cryptocurrency world is all about. So this is my mission, is to provide a gateway, an educational gateway to enable the Gen Z and the millennial generations to discover this sector that never really crossed the radar, and to bring back discouraged boomers who've got tired of this endless bear market, and give them a fresh way to look and think about this sector and be entertained in the way that they used to be, because I do believe we are in a slow-growing secular resource junior bull market. And the 2025 favorites collection had an excellent July as a group that traded more than at any time in the past 2 years. And it achieved a peak gain of 60.1%. It finished the month of July on a sort of a weak note, but it was still up 56.2% compared to gold, up 26.4% for the year, and the TSX Venture Index up 29.9%. And despite this deep unease I have about how the big picture is unfolding for the United States, for the world, the geopolitical conflicts, I remain optimistic that these 25 companies in my favorites collection are all on a path to delivering fundamental success that also rewards people who dare to put money into these resource juniors, a sector that the world seems to have forgotten thanks to this catastrophic collapse of eyeballs, but which I think is poised to become far more important, especially if Canada can make some changes so that exploration in Canada at least can go forward on a normal basis without trashing the environment or anything, but shouldn't be blocked simply because 3% of the population has been elevated to an aristocracy that gets to kibosh anything just because they can.
John, thank you so much for the update.
You're welcome, Jim.
We've been speaking with John Kaiser. I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.